Hey guys, hope everything's going well. It's been quite a while since I've done a video. I hope all of you have had a nice holiday season and a new year. I wanted to do a 2022 Outlook video, and I'm using this new software. Before I was using OBS when I was sharing my screen, where you could see me and the screen, but it wasn't working properly. I finally figured it out on my sports card channel, and also follow me on my sports card channel on AIH Sports on YouTube. I've been doing most of my video content there. Anyways, I want to do an outlook for 2022 here. And I'm over here, I'm looking at the 10-year versus the 3-month, and I'm just looking at basically at the yield curve. I couldn't pull up the Fed funds rate for some reason. I used to. Maybe it's some sort of issue with stock charts these days. I don't know. Maybe I'm not looking for the right symbol here. Anyways, as you guys know that have been watching me for a while, I believe in the theory that if the yield curve is positive, so basically the 3-month is, or the 10-year yield is greater than the 3-month, or if you use the Fed funds, that's bullish for the stock market. And my belief is, or I'm just looking at the data, you see 1.65 here, okay? So I'm just looking at it, and that is bullish for the stock market, in my opinion. Now, that doesn't mean the stock market's going to go up in a straight line. It's just that whenever there are pullbacks, I'm getting in. And what I'm doing is I'm shorting the VIX. I didn't know there's options on the VIX for the SIBO. So that's what I'm doing. And if we see a greater pullback Q1, I'm going to be aggressively shorting the VIX. And I think instead of doing the VXX, where I have to deal with closing out the option before expiration, I don't need to worry about that with the VIX. I don't need to worry about, oh, I need to close this option, I need to close. No, it could just expire. So, and I don't need to worry about it. So that's what I like about these European-based options. No delivery of the actual security. So that's nice. Anyways, just want to review the yield curve. You see in 2001, negative, indicating, you're in a recession. 2007, negative. And before COVID, a lot of people didn't realize this, or I think they did, because the media was constantly talking about it before. The whole media then talked about the virus and the pandemic, but this was foreshadowing some trouble in the banking system, more like the repo system. So that's something to note. Another thing is, let me look at this over here, the Fed funds futures rate. I'm going to show this multiple times. So I did show this on my sports card channel. People are receptive to learning about, learning about financial concepts. So that's good to note. Anyways, January 2020, that's a 0. Basically, you take 100 minus 99.92. So that's 8 basis points. Looking at December, 100 minus 99.03. So that's indicating you're getting close to 4 rate hikes this year. Do I see 4? Probably not. At most, I would see 3 rate hikes. Jamie Dimon said 6 from what I read on Twitter. That's not going to happen, okay? 3 could be possible. But going back to this, is that going to make this go negative? No. So that's why I am bullish still on the stock market. Now, once again, I want to wait for a pullback, a sizable pullback. I know we had a pullback, this week, but I've been following Avi Gilbert, and he's saying that, most likely you're going to see another decent pullback, and he's saying that that's the time to get in. We shall see. Okay. So once again, I'm bullish on the stock market. I'm not bullish long-term. I could do more of a long-term video outlook maybe in the coming week. I have more time on the weekends to do these, and I think it's fun, and I've been interacted with some of you guys lately, so it's good to do so. And I like doing these videos where I'm not talking in front of a screen. People can see the actual screen itself, so that's a good thing. All right, so over here, the GLD, most of you guys like following the gold and silver market. And I'm looking back to 2016, right? And you saw gold bottom out right before some event. What was that event? That was before the Fed raised rates. So there are theories behind the rate hikes. Mike Norman of the MMT school, he says that rate hikes are actually inflationary because you're just giving it, there's more interest out there. And long story short, the way I'm looking at it is whatever interpretation you want to have with rate hikes, ultimately what matters is, do you have negative real interest rates? And I showed on my sports car channel, we have negative interest rates still. So if you just look at where the money has been flowing in a negative interest rate environment right now, it's been going to sports cars, it's been going to crypto in terms of non-stock market assets. It's been going into other commodities as well. Took a break in 2021. I have been trading stocks like Franco-Nevada. I've been eyeballing that, and whenever it takes a huge dip, I want to get in because I've looked at the chart of Franco-Nevada, and I can maybe look at it here. But ultimately, Franco-Nevada during the crash if you look at all the other securities, Franco-Nevada held the best from my memory because it's a streaming company. So it's not necessarily involved in the mining. It just finances all this. And, you know, it's the cream of the crop, in my opinion. Some people may say valuation's too high. I understand that point. But regardless, I'm just looking at the GLD pattern recognition. Still, we're still ripe for commodities because we're in a negative interest rate environment. And if you just look at it, last time rate hikes, you know, it just went up, and then it's been taking a break last year. And I believe before this whole market crashes, probably by 2024 cycles that I'm looking at, gold should be, once you see that rate hike, I wouldn't be surprised to see a sizable run up in precious metals. That's what some technicians are saying. And I don't have all my assets in gold and silver. I have more than other people, but that's what I'm definitely eyeing. I'm looking at also, you know, Wheaton precious metals, you know, which is the equivalent of, what is it called? A Franco-Nevada, but it's involved in silver. So I'm trying to look at the cream of the crop here, looking GDX as well. And yeah, S&P, and I'm going to be shorting the VIX. Last thing I want to show you is that like a 5, maybe a 10-year tips. Just Google that over here. All right, maybe go to the St. Louis Fed. Yeah, I've showed this a lot, or the last few videos in my sports car channel, and it's very important, in my opinion, for sports cards because the real interest rates and negative interest rates are very important in this hobby or in that industry. And I would say the same thing too in precious metals. So, right, 2020 where everything was going down, right? Positive rates, negative. So, you know, you got all this speculation. Also, the Fed was printing money, 80 billion in not mortgage-backed securities, but in U.S. Treasuries, 40 billion in mortgage-backed securities. So 120 billion per month liquidity starting from June. So that helped the sports card market. That helped crypto, in my opinion. A lot of people are talking about, hey, crypto keeps on going up. Yeah, it's going up because the Fed has artificially pumped up all this liquidity in the system. So it has to go somewhere. If the banks weren't aggressively lending, now banks are starting to lend because interest rates are going to go up. You see, this was at the end of the year, negative 1.04. Now, a couple of days ago, negative 0.73. I think it's less than that right now, to be honest. Regardless, okay, these rates are slowly going to positive, but what really hasn't been going up, other commodities like gold and silver. So that's what I think is going to happen. You're going to have a shift towards that, probably other collectibles. The high end potentially will do better, at least before multiple rate hikes. But I see more sophisticated guys going into precious metals because the inflation rate is quite out of control. Now, this is a 10-year, so that's the thing. But short-term inflation with potential mandates from the private sector, potential supply chain issues still not getting fixed. I have friends sending me pictures that they can't get the same amount of food they used to in the past. It's just quite ridiculous, in my opinion. Regardless, yeah, this is what my outlook is. I'm not going to be touching crypto. I'm definitely looking at the S&P on pullbacks, looking at the VIX. When the VIX pops, I'm just going to short that via these options with high deltas. And I'm eyeballing, once again, like the Franco-Nevada, the Wheaton Precious Metal, and all that fun stuff. So anyways, guys, what do you guys think about this year? Let me know in the comment section below. All right, guys, hope you enjoyed this video, and I'll hopefully do more of these videos. I like sharing my screen rather than talking because I think this is just a better way of doing it, in my opinion. All right, guys, talk to you later. Bye.